The gold prices have strengthened today with the precious metal breaking above $1,300 per ounce. On your screens, trading quite flat at this point in time. We have seen an intraday high of $1,309 as well. The prices are getting support from geopolitical uncertainty in Ukraine and technical buying as well. Take a look at the crude prices also, where you have seen the Brent continue to hold above that 110 mark, which is a 2.5-week highs. There are concerns over crisis in Ukraine and evidence of tightening global oil market, and that has been supportive. So 0.25% up on your screens there. Let's get on board also Priyank Upadhyay, who's AVP Commodity Research, SSJ Finance and Securities, and he joins us live as well. Priyank, hi. What's your sense really coming in for the crude oil prices now? We seem to be hitting some supports in this commodity. Are you a convinced buyer?
As you, Manisha, it's comfortably staying above 100 levels in international markets. We had seen a correction in crude oil prices, and from 98, 99 odd levels, we have seen a rally towards 102. I see this rally continuing towards 105 in medium term. In domestic markets, just because of, if you see in the rupee appreciation, prices are on the subdued levels. But still, I will be comfortable in buying crude oil from the short to medium term perspective around the 6,000 levels with a stop loss below 5960, and again we could expect a rally towards 6100, and nevertheless above 6100, if market is continuously trading above that and it gives a close above that, we could see a rally towards 6200 to 6250 in short to medium term.
Vijay, how are you looking at the energy space? Because while even as we must be inching in the international markets, the rupee is ensuring that the crude prices in India do not go up.
I would agree with you, Manisha, and my earlier view of 6065 and then 6125 levels as resistance still holds. Since we breached the 6065 on an intraday basis, although we are trading below that level, I would now want to press shots closer to the 6120 odd levels, and I am not really very convinced that crude oil will appreciate significantly from there on. The fact that you are seeing both open interest and traded volumes indicate that the bulls are the traders are basically enhancing the exposure. The screen tells me that it's more of short the rallies rather than buy the dips kind of a pattern emerging here on the screen, because whenever the rallies occur, the open interest is basically showing signs of bull unwinding, and rallies are not really accompanied by very hefty rise in volumes. Declines, on the other hand, are accompanied by a sharper spike in volumes, which tells me that the bears are a lot more prevalent over the bulls, so to say. So at around 6120, I'm comfortable shorting crude.
Let's take a look at the precious metal space as well, and that has been a bit of a gainer in the last 24 hours, Priyank. At these current levels, how would you want to trade? Because you really need to keep an eye on rupee too.
Yeah, definitely. Rupee is a big concern on the domestic front. If we see in international markets are trading about 1300, but that kind of a rally is not reflected in domestic markets. I feel we could see a range-bound movement on the higher side. Gold prices could face resistance around 28,700, 28,800 zones, and on the lower side 28,400, 300 would be the support zones. More or less, I feel this range would prevail in the coming sessions.
Vijay, what is your sense, especially coming in for silver at these current levels? Do you see some support coming in?
Not really, Manisha. I would still remain circumspect. I would still remain cagey about buying, because I think support exists at 40,250, 40,500 kind of levels. Even there, buying in the leverage space is not justified. If at all you're looking for deliveries, I think you need to wait for the price, volume and open interest, the confluence, all three factors indicating that there is concerted buying occurring. If not, I think even the 40,000 level is not really a Maginot line or a Lakshman Rekha. It could actually get violated if the rupee was to appreciate sharply. So at this point in time, where longs are concerned, as far as I'm concerned, it's hands off.
And to the base metal space, which also has continued to see profit taking, especially nickel, Vijay, another day of a downtrend, or rather a down circuit coming in there.
Absolutely, Manisha. Like we've been discussing for so many days now, nickel had jumped far too ahead and far too much of its fundamental fair value. It was a supply side constraint, and I've been pointing out that in January 2012, the same situation occurred in the same part of the world, New Caledonia. There was a very steep spike on the upside. The shorts were squeezed, and once that supply side constraint was taken off, once the shorts were squeezed, there was a very steep downside. And there you have history repeating itself for the second day in a row. Nickel at a lower circuit. I do not rule out even further declines from here, although a pullback rally prior to that decline might just occur because the shorts might want to take some money home, especially after a 8 to 9% decline in 2 trading sessions. But the outlook still remains pessimistic.
Priyank, what's your sense now coming in for the base metal space? It's not just nickel, the whole host, the whole sector actually has been under pressure today.
More or less, prices would stay in a range. If we talk about copper specifically, copper 420, 424 would be the higher side ranges, and on the lower side, supports will come around 408 to 405 zones. As per the intraday perspective goes, copper can be bought on the break above 419 if it breaks, with a stop loss of 416, and we could expect a 3 to 4 rupees upside on the copper prices. Talking about aluminium, I feel 104, 103 would act as a supports going forward, and on dips around 103, prices could find a support and move higher towards 106 to 107 in coming days.
Vijay, we have seen most of them see a decline today, whether it was chana, the edible oil space, most of spices as well have seen a negative closing coming in.
Absolutely right, Manisha, and that is one reason why I think that the markets are basically not taking a call. Just like I said, I wouldn't personally want to take a call. There is tentativeness in the market, and not only is there a tentativeness, but what is even more of a noteworthy factor is that open interest and volumes both are shrinking. The traders are actually adopting a wait and watch, sitting on the fence kind of an attitude, and whenever that occurs, I think building any kind of an aggressive exposure both on the long and short side can be extremely hazardous for a trader's trading book. So I think for the next couple of trading days, I would like to wait and watch the agri space.
Fair point. But Vijay, what's your best call now coming in for the day tomorrow? Because it's going to be a volatile day. While all eyes would be on elections, how do you expect the agro space to be trading now?
Manisha, any commodity which has seen a very steep run-up in the last couple of weeks, I think there would be a balancing of books, there would be unwinding of those positions, and cash conversion to cash. On the other hand, if there's been an absolute significant and sizable decline, those positions would also get squared. So tomorrow would be more of a, at least in the first half of the session, more of a book balancing kind of a phenomena where both longs and shorts would basically want to convert to cash. Volatility, I expect, would go up significantly. So I would be a little iffy about initiating fresh trades tomorrow.
All right, so that's the view coming in from the expert. Then the first half is expected to be volatile, not so much volumes though. And on your screens, it's just a couple of commodities which actually have closed the day in green. Rest all have seen some profit taking coming in.